Ambareesh Somil, independent market analyst with us, and Somil Mehta, held alternate research Mirae Asset Share Khan. Gentlemen, good afternoon. Thank you so much for giving your time to ET Now. Ambareesh, I'll start with you. GST rate rationalization, we did see cheer in the market, but it was short-lived. However, the festive season is upcoming. It's already started. How do you see the texture of the market?
See, the reason, this rally which we saw was short-lived, basically because, the expectations were clearly built up post PM's Independence Day speech. And whatever came out was not very different from what people were expecting. And markets had rallied in between based on those hopes. So basically, it is buy on hope or buy on rumor and sell on news. I think that's what has happened as of yesterday and today. But then clearly, I think the markets have seen the intermediate bottom. So I really don't see the markets going below those levels of 24,200, 24,300. Whereas on the upside, I think we would be more or less capped at, closer to 26,000 levels because unless, of course, we see the earnings uptick majorly coming in, I really don't see the markets crossing those 26,000 levels. So broadly, if you're talking of the next couple of months, I think we should be in this broad band of 2,000 points of Nifty. And when we're talking of the GST cut, yes, I think this will spur consumption going ahead, and especially, we are looking at the festive season, and normally we see during festive seasons the consumption moves up. So this would be a booster for that. So, and it's been across, various segments. So. From a consumption angle, yes, I think it was a very, very positive announcement.
Coming in, Somil, hi, welcome to the show. Good afternoon. Want your sense on Nifty Auto? Now, the kind of rally that we've seen post GST, we were expecting to see a similar move coming in for FMCG, but unfortunately, that's not been the case. But if you talk about some of these auto stocks that are doing very well for themselves, you also have someone like an Eicher, M&M, Ashok Leyland, Excite. They are soaring away for days in a row now. Let's talk about M&M in particular on the charts, Somil. How is this stock shaping up? Because a 6% jump up yesterday, another 2% today. What are some upside levels you're watching here?
I think I'm pretty bullish on auto sector. The best risk reward at this point of time is at in Bajaj Auto. But yes, M&M, Maruti, Eicher Motors, TVS Motors, all of these stocks are looking really great. They are in a mid to long term uptrend, always taking support at 20 and 40 daily moving average, which is a very good sign. Every time it consolidates for a couple of weeks, it breaks that consolidation on the upside. These patterns are really positive for the stock. Now, in M&M very specifically, there was a very big range, if you see, from 2024 September to till now, till May 2025, there was a huge range, and that range has broken on the upside, which is a very good sign. Even Maruti has the same thing. So this range breakout has, this is a long-term range breakout. So I'm expecting 4,000, 4,200 for M&M on the upside. Crucial levels on the downside would be 3,200 and 3,000 levels. 3,000 is 200 daily exponential moving average, which is a very, very crucial support for this stock.
Take on M&M, but Kunal, weigh in here and let's talk about Tata Motors, a stock that's not done anything at all. In fact, very lackluster momentum coming in, and even the GST news especially on the EV segment, the 5% GST news was not able to excite this stock too much. Or what is your reading on the charts? Any near-term upside or any change in momentum you're spotting for this one?
See, I think the turnaround should happen for Tata Motors, but it would probably take at least another couple of weeks, if I'm not wrong. The reason why I say is that because after, I think, 2024, September or October 2024, for the first time, the stock has come back into a retesting of its 200-day moving average. Now, it's a very, very crucial parameter for a stock like Tata Motors. Just to put it into perspective, I think in September, October 2024, when the stock had broken below this 200 DMA, the stock was almost at 970 to 1,000. And from there, the stock had fallen down to 550, 600 levels thereabouts. So, it's a very sharp indicator that the stock would come back into a turnaround mode pretty quickly. The only point is that the confirmation of this 200 moving average is something which you will wait out for. That level, I think, is around 710, 715 mark for Tata Motors. So potentially another 3, 4, 5% up move for the stock from current levels is where I would believe that we could be looking at a potential turnaround. The initial move could be a bit slow, gradual for the stock price, but then if the entire auto sector, like what we've seen for the other two-wheelers and four-wheeler stocks, the fact that these stocks have done exceptionally well in the last 2-3 months. So it could be just about a matter of time that Tata Motors would also get back in line and cover up this massive underperformance. So I would probably go for a potential buy about this confirmation of 715 mark for Tata Motors.
Okay, so a slow and eventual move to start with, but the turnaround is absolutely expected on Tata Motors as well. 0.5% gain, 691. And not to forget, along with the auto space, the auto ancillaries are also doing positive in trade. Have a look at the tire stocks or the battery for that measure, or the ancillaries, the carbon black stocks. Those are also on the focus radar, because if the auto sector is going to work, the auto ancillaries are also going to perform. But having said so, let's also go across to another important story. Amid rising global tensions and US President Trump's wishes for Apple to manufacture iPhones in the US, the company is set to post robust sales in India in FY25 and 26. Let's go across to Sumita and understand what are the details we are gathering. Sumita, what does the sources say?
That's right. Apple's sales are expected to have touched $9 billion last financial year after its retail push came about. In fact, iPhones accounted for a majority of the sales that the company clocked. In fact, Apple just recently added 2 new stores in the cities of Bengaluru and Pune, aside of the already existing store network that exists in Delhi and Mumbai. In fact, the company is also planning to now launch new outlets in Noida and Navi Mumbai early next year, according to what sources are suggesting. And it only adds to Apple's reseller network. Now, this announcement of the kind of sales that Apple has clocked in, it's coming in at a time when the company is dealing with stagnant mobile device sales around the world. And of course, there's geopolitical uncertainty that persists, especially around China, given the fact that China has been earlier engulfed in a trade war with the United States. It's also the company's largest base. India, even though it represents still a fraction of its overall business, has a 7% market share here in this country. But the company continues with its push here, and this market is expected to become a key market for Apple in the next couple of years. So whether it's related to the company's manufacturing plants or retail, that's essentially in a push to reduce dependence on China. In fact, Apple is expected to account for 25% of, India is expected to account for 25% of Apple's production. And in terms of production and devices, well, just ahead of its annual event on September 9th, Morgan Stanley has released a note on Apple, and it expects Apple to increase prices modestly for its iPhone 17. In fact, average selling prices could see a boost of 5% in FY26. In fact, this is the first ever hike that is likely to be taken by Apple since 2017. However, Morgan Stanley doesn't expect demand to be impacted. So all eyes on the September 9th event now, when Apple unveils iPhones, watches and AirPods too.
Okay, Sumita, thanks for taking us through all those details. So, well, yes, big announcement expected from Apple soon, and the unveiling of Apple iPhone 17 is also expected over the course of next week. But Ambareesh, while we're talking about this entire mobile manufacturing topic, give us your sense on Dixon Tech, and if not in particular, the entire sector, and also on the semiconductor names like Keynes, for example, because we've just had commentary coming in from Donald Trump a few hours ago, wherein he said that he's also going to be putting tariffs on semiconductors, albeit it won't be very high. What's your take on that?
See, semiconductors again is a very long-term story. So irrespective of whatever tariffs it puts right now, I don't think it's going to affect us at all, because we are just at the beginning of, manufacturing semiconductors. So I think we have a long way to go. So I'm not really bothered about that. And as far as we are talking of the third-party manufacturing, which is being done by people like Dixon, I think that, again, may not really get affected too much, because there is a decent amount of sales which happens outside US. And these facilities will continue providing the models which are meant for other than US. So I don't think even they would get affected.
The government in itself is trying to give a better push to the semiconductor space. Longer story, of course, but in the next 5 years, independent semiconductor production hub is what the government dreams for semiconductor industry in India, on the back of which we also did see PM Modi inaugurating the Semicon 2025 conclave few days back. But moving ahead and talking about a few other stocks which are doing a positive in trade, let's take a look at the exchange ancillary BSE Limited. The stock was trading with an upsurge of around 4%, and even right now it is trading with an up move 4 to 5%, 2, 3 to 1. Kunal, remember this week marked the first weekly expiry change, and even still the traders are positive about the exchange ancillary BSE.
Yeah, and I think it's a very good move for BSE. Of course, even though the stock has not yet confirmed a breakout or a turnaround as such, but the fact that the stock, after lot many days of underperformance, for the first time, I think it started to open with a mild bit of a gap up and then sees a follow through up move throughout the rest of the trading day, even at a point where the index at one point was down 0.5% or so for the banking index specifically. So I think this comes as a positive move for a stock like BSE. This could also mean that potentially we may expect the stock to gradually start to at least show signs of strength and resilience. The breakout point for BSE, as I mentioned also, I think was around 2,500 levels. So I would actually wait out for a confirmation of a breakout for a positional trade for BSE. But for traders who are looking at a buy for the stock at current levels in the anticipation that the stock would get back into a turnaround, I think today's move shows those kind of ingredients.
Okay, so rather optimistic on BSE. And while we're talking about technicals, Somil, share with us some of your BTST ideas, the stocks that have made it to your radar today. What's looking good?
The first stock which I like is Chola Finance. The stock has just broken out of a small consolidation, taking support at 20/40 daily moving average. A good setup. Stop loss would be 14.55 and the target would be 15.50. The second stock which looks great from here is Glenmark Pharma. Have taken support again on the short-term averages, small ending diagonal pattern breakout on the upside. Stop loss would be 19.90 and target should be 2175.
Okay, so these are the calls, trading ideas. Glenmark Pharma, the target, stop losses and the strategy from Somil is here on your screen. Moving ahead, let's talk about another incident. Earlier in the day, Mumbai's traffic department received a bomb threat from an unknown individual claiming to be from Pakistan. The message also stated that some terrorists have already entered the city and are planning an attack on the last day of Ganpati Visarjan, which is tomorrow. The Mumbai police have taken the threat seriously and have begun deploying armed forces across the city in anticipation of a possible attack. My colleague Nilesh Shukla is here with more details on the same. Nilesh?
Well, yes, Mumbai Police's traffic department on their WhatsApp number, their official WhatsApp number, had received this threat message by an unidentified individual. Now, this individual in his message had claimed that how there are several individuals who are roaming around the city with ID and other explosive devices and are keeping these devices into certain vehicles. And this individual also goes to an extent stating that how around 14 terrorists have already made it into the city and they will be active onto the Visarjan day, that is tomorrow. And this will create a massive damage to the city. Now, this individual, this message sender, also reveals that he is from a Pakistani-based gang, and which is why he is spreading terror into the city of Mumbai. However, police officials are investigating the case as of now. They have registered a case and are of opinion that they feel that it could be a hoax message. However, given perspective that tomorrow is a Visarjan day and massive number of crowd will be appearing in and around city, traveling across the state to witness this particular moment, and which is why no leniency is being taken up by police officials. Huge number of police deployment is already seen around the city. After this threat message, the security arrangements has only picked up, and the Mumbai police are constantly on high alert.
Okay, well, unfortunate state of affairs coming in, and of course, something to be vigilant about, cautious about, and we'll bring you up to speed on everything that happens on this front. But once again, shifting focus to the market, and we were talking about BTST ideas, some stocks that Somil was discussing. But Kunal, what about you? What's looking good today? Any shorting opportunity, or are you a buyer on dips? Is that your strategy?
Yeah, absolutely a buyer on dips. No shorting for the index as well as for the constituents. But I think it's a good time to try and identify trades which I would believe potentially are nearing signs of a breakout for themselves. We were discussing IDFC First Bank in the morning. That's something which starts to look attractive from the mid-cap end of the private sector banking names. Now, I also understand that, yes, Bank Nifty has been a big laggard and a huge underperformer. But then when you start to see those signs emerging for individual stocks in terms of a potential breakout, you expect that the sector would also get back into a turnaround mode pretty quickly. That's my anticipation for Bank Nifty, and IDFC First Bank is something which I would recommend at current levels for a near-term target of 78 thereabouts. Stop loss could be kept at 69.
Okay, so these are the trading ideas coming from Kunal Bothra. Definitely a buy and dips market, a stock picking opportunity, and consider all of these stocks as trading ideas and opportunities. But Ambareesh, talking about the insurance space and individual health insurance and term insurance, 0% exemption, the GST announcement, it did not really reflect and kind of backfired in the yesterday session, but now the insurance space has made a comeback.
Right.
What is your take on the sector?
No, so see, surely it's a positive announcement, no doubt. But then I don't think the customers will get that 18% benefit. The benefit may actually come down to say around 11%. I think most of the insurance companies are working on it, and we still don't have a figure as such, a clear figure on that. But they need to pay GST on the other services which they use. So end of the day, since there is no set off because of no GST being charged, I think somewhere the insurance, like the cost will surely go up. So that's the reason I'm saying that the benefit for the end user could be about 10 to 11% and not 18%. But overall, it is positive for this space. So because of which, I think at least in the medium to longer term, we should see most of the insurance companies, especially life as well as health, doing much better than what they were doing earlier.
On the insurance space, and lots to watch out for in terms of next week as we're drawing towards the end of today's trading session. Here's what to watch out for when it comes to next week's trade. Of course, on Sunday, the very important OPEC Plus meeting is going to be a key event to watch out for. The expectation is that OPEC is going to be keeping its output largely flat and unchanged, but we'll bring in Ashesha in a bit to help and decode that. For our markets, 10 September, we have the AMFI and SIP data coming out. Of course, the two weekly expiries, NSE on Tuesday and Sensex on Thursday, is going to be very keen to watch out for. The biggest trigger for our market is going to be the CPI numbers, the inflation print coming on the 12th. While that's the action back home, over the course of next week from the US, you have PPI, CPI, jobless claims, of course, industrial production from UK, Japan. ECB rate decision is going to be happening next weekend, and so is the Fed decision on 16th and 17th of this month, which is why Fed is going to be going in a silent period. But we were just talking about this OPEC meeting to watch out for on Sunday, and Ashesha has joined us to take us through what the street is expecting. Ashesha.
Yes, Nehi, all eyes are on the oil market ahead of that OPEC Plus meeting that is scheduled to happen on Sunday, that is the 7th of September. And the larger expectation is that the OPEC Plus group of countries will perhaps go ahead and announce output hike yet again for the coming months as well. Now, remember, a series of output hikes have already been announced over the last few months. In the months of May, June and July, 411,000 barrels per day output hike was already announced. For August and September, 548,000 barrels per day. They've completely unwound the 2.2 million barrels per day output cut they had announced in 2023. So all eyes are on the kind of commentary that comes in from OPEC Plus countries. Now, if you look at the moves in Brent crude prices, remember, Brent crude has fallen nearly 6% in the month of August, and it is down nearly 2% this month so far after several consecutive months of uptick that we saw in oil prices. But yes, as you mentioned, all eyes are on OPEC Plus, and the large expectation is that perhaps they could go ahead and announce another round of output hike for the remaining months of this calendar year.
Okay, so that's a take coming, and we'll keep a close watch on the OPEC Plus output hike and give you details of the same. But taking a look at what's happening with the energy pack and $67 to $68 a barrel, where Brent crude is ranging, let's take a look at the oil refiners also. Kunal, oil prices are easing on surprise bill as you guess crude stockpiles, and the OPEC Plus is going to consider an output hike. MRPL, Chennai Petro, in the first half, it was doing positive. What does the technical suggest here?
So, first, if you look at crude prices, it's not as if that there's any major spike in the prices. Even if we look at the charts for crude oil, I think it's largely, if I'm not wrong, it's around $66 to $68 per barrel for the Brent crude. And, there's
66,
hardly...
67, yeah.
Yeah, so 66 to 68 range has been the range for Brent crude. And no major triggers, at least in terms of the charts, which has been building up. Earlier what used to happen is if there is the, OPEC meet, which is very important, or, the crude prices would ideally have gone to any kind of a momentum breakout, or there's been some sort of an anticipation, but that's missing for the prices so far. So that probably, I believe, could be an indication we may not see any major change on the prices or the Brent crude prices effectively, I think, over the next week. That, I think, could probably be a point where I would like actually look at oil marketing companies, the likes of BPCL, IOC, HPCL. These stocks have been a little bit more quiet over the last few weeks. There could be a potential turnaround for many of the stocks in this space.
Okay, so that's the take on some of these oil-sensitive counters. But on that note, Somil, Kunal, as well as Mr. Baliga, thank you so much for your time today.